Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes on Thursday, the 16th of January. Starting off with Asian Met Resources, where it looks as though we might finally have salvation for the bulls. They've in recent months. The clear break of this November resistance line at around 2.25 pence is the first plus point. The other positive is also the way that for the first time since, basically the end of July, we see the RSI hold above the neutral 50 level. It's up at 56, which is a leading indicator normally on further upside. If you're cautious on the stock, maybe you'd wait for an end-of-day close above the 50-day moving average. That's at 2.4 pence. But that the way should be smooth towards the top of a rising trend channel from up to 3.5 pence. Stop loss obviously back below today's support, which was around the 2.1 pence level once you're in that particular situation. On to another problematic stock in terms of not really being able to deliver what the bulls want. Allied Mines, finally we seem to have had a spurt here through this triangle from post-September triangle, top of that resistance line there at 51 pence. The view at this stage is while we hold above the 50-day moving average at 48.57 pence and this uptrend line from December, the initial target, the 200-day line at 59 pence, and then as a best-case scenario up to retest September resistance at 65 pence over the next few weeks. New stock for the Bulletin Board Heroes today is Digital Box. It's gapped up through the 200-day moving average by quite some margin. There was a gap, actually gapped through the 50-day moving average and a gap in mid-December as well. That's normally a sign that a turnaround is in the offing. What we'd like to see probably now is an end-of-day close above the December peak at 8.5 pence. But if we get that, we could be on the way over a 2 to 3 month view for a target at the top of a rising trend channel from early last year up to 20 pence as a best case scenario. As I said, over the next 2 to 3 months, that would retest the old resistance area from a year or so ago. Stop loss at this stage quite obviously at or just below the 200-day line at 6.5 pence, maybe a bit lower. You could risk down to the 50-day line at 5 3/4 as an alternative. Another stock which has been on the back foot for quite a while, but looks as though it's ready to rock again on the upside is Emerson. Clearly broken the troublesome 4 pence resistance area that the shares had. I suppose that was that 4.2, 4.15 there. And basically, while we hold above that neckline resistance, looking for further, hopefully sharp gains. Obviously retesting May resistance from last year at 6 pence would be the ideal scenario there for the shares, and the logical one. Best case scenario probably at this stage is the top of a rising trend channel I've just drawn from May heading up to 7 pence. So everything to play for there at Emerson while we hold above the 4.2 level. Stop loss probably at this stage just below the 200-day line at 3.91, which should cover any eventualities. Onto another new stock for the Bulletin Board Heroes, coming in the form of Elicosoft, stock I really haven't seen before at all, but too good to resist here with this triangle break, breaking the triangle from 2018, and also a golden cross over the last few days between the 50 and 200-day moving averages at 77 pence. Ideal scenario here is that while we hold above the 50-day line and the 200-day line around 77 pence, we head up towards the top of a rising trend channel from May last year up to £1.10. The fact that there's been such a long consolidation of a year and a half, and we've broken the logjam, should mean that we may see some decent progress, probably of the nature of what we saw in the early part of 2018. So possible good news there. Another stock which has been in the doldrums but looks like it's back in business is hemagenx. The reason for saying that is the break of this wedge from June, the resistance line there at 2 pence, also tying in with the 50-day moving average at 2.01 pence. And while we hold above that feature after yesterday's gap to the upside through the 50-day line, The target here is as high as 4 pence for the shares, which would be presumably quite a relief for long-term holders of the stock. Yet another new name for the Bulletin Board Heroes today, coming in the form of Tremor International. Couldn't resist this one. The break of this £101.80 level yesterday suggests that we've got plenty of further upside to go. And in fact, the way that we've also broken that 193 peak from July, an added bonus today. That suggests that at least while we're above 180, the target here is the top of a rising trend channel from the end of July as high as £2.60. Just looks like a smooth and relatively fuss-free chart there on Tremor. Finishing off with the stock I haven't looked at before here on the Bull Heroes, comes in the form of warpaint, and the reason for the inclusion today is the break of this falling wedge from the end of October. The resistance around 71 pence level, and while we're holding above recent support at 68 pence, looking for at least a retest of the November peak towards 100 pence, and possibly higher than that with a let's say £1.10 target, which would be the top of this rising trend channel from August. So looking interesting there. If you're cautious on the stock, maybe you wait for a break of the 50 and 200-day moving averages at 80 pence, but it looks as though the shares have already achieved their breakout, especially with the RSI breakthrough neutral 50 as well. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.